To all my listeners, whether you're a gold bug or you're concerned about inflation and protecting your capital, you need to check out my brand new conversation with Dan Ferris on the Stansberry Investor Hour podcast out now. You can easily access the episode by clicking the link in this video description box. Hope to see you there. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. Well, my guest today says that the carbon credits markets are set to explode by a factor of 20 by 2030. And our investors are going to be hearing a lot more about this sector. But what exactly is it? How do you invest? How do you get in? Well, he's here to break it down for us. Please welcome back Josh Crumb, founder and CEO of Abaxx Technologies and the founder of Base Carbon, which is set to spin out of Abaxx and list as its own company in Canada early March. Josh, always good to be with you. Welcome back.
Thank you, Daniela. Good to be here.
Well, we're talking carbon credits today, which is going to be a new sector to a lot of our viewers and investors watching. But it's all about reducing greenhouse gas emissions, right? That's the bigger picture. But tell us a little bit about why you think this sector is going to be so explosive and the one to watch.
Maybe to step back to explain a little bit what carbon markets are. There are a number of different types of carbon markets. And really what people are calling, at least in the voluntary market, the one that's set to grow so significantly, it's a lot of people are calling carbon 2.0, something like that. So I think maybe it's important to step back a little bit, and even myself as a background, I've not been in the carbon markets for a long time, but really my background is in commodity markets and how these commodity markets, whether you're talking about lithium and battery metals, or you're talking about carbon markets, how these markets eventually grow and evolve. And really what we're at is this super exciting point here in 2022, where both what we think the scale of the carbon market is, the voluntary carbon markets are going to grow, but also beyond just investing in carbon projects, the capital markets and the capital formation for companies that are very specifically formed to develop these decarbonization projects, that's really set to take off. And we're starting to see the initial signs of that in Canadian capital markets.
Thank you for that summary. And I was going to say, it's interesting to note that everything from travel to farming to even, conducting this interview and people watching the interview emits carbon dioxide, correct?
Exactly. And I think that's what's so unique and different about this market, is really every economic activity has gone through what I call the sort of, the study or the design study phase, really over the last 2 years. It really doesn't matter what sector you're in. People are trying to look at the impact, the carbon and greenhouse gas emissions of any economic activity. So this makes it very, very unique in really any commodity markets, where you're really talking about every commercial activity having some aspect of carbon exposure. And so therefore, almost like an input commodity, companies will be looking to sequester carbon or offset carbon in some way. So it really is a commodity that's going to touch every single economic activity.
So basically, by providing economic incentives within a market-based system, many believe that carbon trading is the most effective way to fight climate change. True?
Absolutely, yes, because really what you're giving is an incentive to the market to invest and sort of lower the cost of sequestering carbon. So, for instance, there's really two types of carbon markets. There's a cap and trade system where a government or a sovereign says, this is the absolute amount of emissions that can happen, right? And so anything above that, if you're more efficient, you're going to have extra credits to sell to someone that's perhaps less efficient, right? So that's really a cap system where then people trade whether they're above or below that cap. That's really what we've seen in the EU ETS, North America, and now in China. So probably 40% of global industry is now probably sitting in some sort of cap and trade system. But that's very different than the voluntary carbon market that I'm discussing, where again, literally every economic activity can be tied to this, where you will actually purchase a carbon reduction certificate from somewhere else to offset, what you're doing. And a lot of this is done in a voluntary way, which we can get into in a second.
Yeah, and there's a lot to get into, but to that point, and on the flip side, there are those that would argue, this only delays society's transition away from fossil fuels. What do you say to that counter argument?
Yeah, I think that's a very tough argument to make, particularly after what we've seen in Europe and Asia the last 6 months with sort of ongoing energy crises there, right? Because we just are not. I mean, energy infrastructure is so difficult. We've actually never really transitioned our energy infrastructure. The history of energy growth, both on the supply side and demand side, is we're always adding new energy systems to the mix. Maybe we'll level off in coal in one particular region while we add, renewables or others, but we're never actually absolutely declining in any energy system. So, really it comes down to energy security and energy poverty. We do not, we need economic growth, which is going to result in more needs for fossil fuels, particularly in emerging markets. And so this is a way to make those net zero by actually, yes, we may grow our emissions in one place, but we'll reduce them in another place. So that's the important part. So yes, there are always there's going to be people that say we need to absolutely reduce our emissions and just end fossil fuels. And there's many political activists doing that. But the energy system is saying very loud and clear. If you look at the rise in coal prices and coal production the last year, the rise in natural gas, for energy security reasons and our food systems, not freezing in the winter in Europe, we need to grow energy production. So we need an offset of some, outside of that system, reducing that carbon, the overall carbon in our economy.
So, Josh, what's interesting to me is that, obviously there's certain countries leading the way for carbon credits, Canada at the forefront. And, having spent a lot of time in Vancouver and in that circle that's known for obviously commodities and gold investing and precious metals, there seems to be now money flowing into carbon credits, right, to this sector. How big is it and why now?
Yeah, well, I think now is a very important time because sort of every new carbon sort of global summit that we've had every year, more and more the rules or the internationals are agreeing more and more on the types of rules and protocols to be in place. On top of that, I think we moved from the political sector into the commercial sector in leading the charge, right? It's no longer necessarily the UN that's driving the charge. It's actually, BlackRock and institutional fund managers. You're now seeing corporates making net zero commitments that's going into all of their planning and all of, and so we're moving from that, again, that sort of being compelled to move to employees, to customers, demanding this of their corporations. And so these net zero commitments are now being led by the commercial sector and the finance sector, and they want to incentivize this to happen rather than, so it's more the carrot, the economic carrot, rather than the stick of regulation.
And it's a sector that you say could grow 20-fold by 2030.
Yeah, absolutely. I mean, look, there's a lot of difficulties in measuring the accounting of where the market is at today. But really we're probably somewhere around $1 billion in turnover in the voluntary carbon markets. And that's something that actually can reach something like, well, at the low end, people are talking about 20 to 50 billion by the end of the decade, and at the high end, as much as 100 billion. So if you use some of those higher numbers, you're talking about basically the capitalization and turnover annually of half of the global copper market. So can you imagine building the entire half of the copper market in 8 years? That's sort of the scale of this investment right now.
Josh, what would you say to critics who say, look, carbon trading in theory sounds great, but it's really hard to put into practice? The first international carbon market was set up under the UN's 97 Kyoto Protocol on climate change. However, following widespread reports of corruption and abuse of the system, the market collapsed. And a report in 2015 found that an estimated 80% of sustainable projects under the trading scheme were questionable. enabling emissions to increase by roughly 600 million metric tons. So what do you say to kind of the hairy past that it had, and what are some lessons we've learned here?
Yeah. So first off, the risks are very real. This is going to continue to be a sector, as the growth of any early commodity as well. Where you're going to have, it's going to be a little bit of a wild west. There's no doubt about it. There's going to be, carbon credits that, methodologies of essentially a carbon credit, very different than like a pallet of copper or a barrel of oil. It's not obviously a physical commodity in that sense. Really, what a carbon credit is almost like a court case. It's a document and a project study. If I do this, it will reduce emissions by this, right? And there's a lot of peer review in this. So basically, there's going to be a lot of people, that have different views on what the actual emission is going to be. So look, it's not going to be a clear-cut market. There's going to be a lot of risks. But that said, that's how most commodities. There's a different spec. Like we don't just use crude oil. We're constantly changing our refining standards. What's used, what's safe. So just like any other commodity, there's going to be a path towards development.
And I think that's a really fair and honest statement, Josh, that you're making. That for the time being, it may be the wild west. So for an investor, right, who's looking to to capitalize and get in early if it's really set to explode this big, what should one be looking for? I mean, you're going to be launching your new company, Base Carbon. I know there's an ETF launching in Canada. How does one expose themselves to this sector in a relatively less risky way?
Yeah, well, I mean, I think like any long-term capital project and development, where there's the longer the project is until cash flow positive, the more risks. You really have to rely on the management team. Having a good management team and having good partners in the project is key. No different than most natural resource projects.
So your company is going to be, obviously a pioneer in the sector, but do you think we're going to see, because the sector is going to be so hot, a lot of companies just mushrooming, and that's where people have to be careful?
Absolutely. And Canadian capital markets, I think, are particularly used to this type of upstream resource, almost commodity development type infrastructure, right? We saw it in the early 2000s with the growth of all of the base metal and precious metal mining companies, the oil sands, these emerging commodity markets and growth markets. Canada is particularly in tune to investing in these types of risks. We, more recently, of course, the growth of the blockchain miners, say upstream cannabis development, Canadian capital markets are very used to these types of markets. I actually think compared to battery metals, we're probably going to be much bigger in the carbon market. This is going to be orders of magnitude scale.
Wow. I guess just you brought up blockchain, and I had Kevin O'Leary on, the other day, really slamming what he calls dirty Bitcoin miners who hide behind carbon credits and to say that they're ESG compliant and whatnot, and it gives the illusion that they're greener, but they're not. Do you think that Bitcoin miners using carbon credits would give a bad reputation to the sector as a whole, Josh?
Yeah, so I'd say there's two answers to that. Like one specifically in blockchain, Bitcoin mining or proof of work mining. First off, I think they may be early adopters to this just because of the technological. It's sort of like gaming and like a lot of internet companies are typically faster adopters to new technologies and new ways of doing things. And even the fact that a carbon credit can be digitized more natively, because again it's almost like a court case. It can be almost like a document that can be digitized much easier than digitizing the title to a barrel of oil. So I actually think blockchain companies may be some of the first consumers of this. But addressing the bigger picture, is this a tax? Are we hiding behind it? I don't like this. I don't like this analogy or this concept at all. like at the end of the day, if it's providing economic utility, we're talking about decentralized computing and a whole new, more revolutionary way of doing things in Web3. Is that a sin to be running new computer infrastructure? I don't like that. I don't like the idea of, hey, we're consuming oil, so that's a sin. This is a sin tax. Heating your home is not a sin. Driving is not a sin. Using a blockchain. So trying to create some sort of moral judgment on the economic activity and then have an offset over here, I don't like the way of looking at it. I think you provide a utility, maybe you emit carbon for doing that utility, so you plant a forest over here. I think that's absolutely the right economic way to approach this.
Josh, I really appreciate you coming on and educating the audience here. I like to keep them at the forefront of the hottest sectors. I guess before we wrap, any key points you want to make here that people should know about the carbon credit sector?
So again, I'm the CEO of Abaxx Technologies. Our focus is we're building a new energy futures exchange based in Singapore, and our primary products are building a physical futures market for liquefied natural gas, as well as carbon credits, as well as gold. And we've led a global carbon neutral working group with the LNG sector, and we think LNG is going to be here for decades to come. Even if oil demand peaks, LNG is going to continue to grow and replace coal, particularly in Asia. And so, again, it's going to be a huge consumer of trying to stay at net zero. Even though you got to burn that molecule, they're going to offset it by investing in carbon projects elsewhere. So we're seeing every industry kind of at that starting line ready to go. And that's why we started a carbon neutral working group. So I think that's another key thing that people need to watch for in the sector is who's actually the buyer of these credits. Are they planning to just create all these credits and then try to sell them to retail investors, or are they actually partnered with huge industry demand who are partnered in the projects, and you have certainty of a buyer on the other side?
Josh, well, I know anyone who would Google your bio will see your long list of successes in building companies. So I wish you success and all the best with Base Carbon coming early March. Good luck with that.
Thank you, Daniela.
And thank you all for watching. We'll have much more for you on Stansberry Research, so be sure to stay tuned. And don't forget to sign up for exclusive content you can't get anywhere else at danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.